Hello students, in this tutorial we will learn what is TDS, tax deducted at source. The concept of TDS was introduced in Income Tax Act 1961. The only objective was to generate a regular flow of revenues to the government of India. Earlier what used to happen, people used to pay their income tax at the end of the year, and many people used to waive it off, or they would not pay it appropriately. There was also not a better monitoring of a system that how much income is earned by a particular person or a particular vendor or a supplier or a company. So government thought that let's put income tax, that is TDS, at the source itself, so that they would be able to track directly the source of income of the people, and they introduced this tax deducted at source. So the TDS is mainly deducted on salaries and on the other payments made to the uh, contractor or a company, for example on rent, or you can say professional fees and many other things. So the TDS process is like this. Let's take see first example. Say suppose Universal Infotech is making a payment towards rent to the owner of the building. So under section 194I, the Universal Infotech would deduct a payment, or deduct a TDS of 10% on the rent on that owner, and then they will pay it to the income tax department and file the return. So TDS process is like this. Deductee provides a services and the bill to the deductor, a seller we can say, and a deductor makes a payment to the deductee after deducting the TDS. Means a buyer who has bought the services would deduct a TDS according to that section of the seller of those services, provider of the services, and he will pay the remaining payment to that seller. The TDS amount which deductor the buyer has deducted, they will deposit it to the bank or treasury, and the treasury remit the amount to the government account. Then again a deductor would issue a form 16A. A buyer would issue a form 16A, which is a proof that they have deducted TDS, and the form 16A would be used by a seller, or you can say a deductee, while filing uh, a income tax year return at the end of the year. If the income tax liability is there, then that income tax would be deducted from the TDS, and remaining income tax would be paid at the end of the year. If the company is running in the loss and there is no income tax liability, then the TDS deducted would be refunded to that uh, deductee or seller or a company you can say. And then you need to upload a ETDS to NSDL website. The deductee files the return with form 16A to the income tax department at the end of the year. So this is what a TDS process is. In short, a buyer deducts TDS on particular payment made of the seller. The buyer deposits that TDS in the treasury. The buyer files the TDS return and issues a form 16A to the seller, and finally a deductive files income tax return with form 16A to the income tax department. And finally, if there is income tax liability, that TDS amount would be deducted from the income tax liability and remaining amount would be paid. Or either there can be a case when the company or person is not making any income, so that TDS, whole TDS would be refunded to that company or a person. So this is what a TDS is. So in next tutorial we will learn how to create TDS masters in Tally ERP 9. Thank you very much for watching this video.